In this video, learn what Cardano is doing in the real world to increase users of its blockchain and why the total value locked on the Cardano blockchain has gone up over 100% in the last month. Getting right into the video, we see Cardano is at 88 cents right now. I do believe that 90 cents or that kind of $1 mark has now turned into resistance for the price as opposed to support. We are still, in my opinion, in very uncertain times and really in the midst of a bear market. And so I don't really see too much good news pumping prices. But if you are in it for the long term, then obviously you're going to want to know what is Cardano doing over the next 6, 12 months and then few years to actually increase users. I think that the blockchain world we're in a different space right now. And a lot of these pumps that happened during the previous bull run are going to turn into some more somber real world valuations about what's actually happening. Luckily, Cardano is doing a lot of real world stuff and has a lot of plans to bring real users onto its blockchain and give them some sort of usable infrastructure. So what we can see here is, Cardano's TVL, this is total value locked, has gone up around 100% in, the last few weeks. Really great news. Now TVL is obviously really a very crude metric. It's not a great metric to look at, but obviously, more is better in a general sense. Now, from here, you can see we've got, around 300 million. This is very small in comparison to other blockchains, right? So I'm not kind of jumping up and down with joy for this. Still very early stage for Cardano. We can come to something like Ethereum, 81 billion, right? So there's obviously a much bigger ecosystem here, but for Cardano, obviously things are going in the right direction, and there is still no stablecoin on Cardano itself. This is a huge issue for me, not having a stablecoin, but those stablecoins are coming, and I'll get onto when and how they're coming in a second. But I just want to look at Minswap, which has basically become the largest app to actually have value locked in it, and they have a really good feature which is Zap In. So this is essentially when you want to add liquidity onto the platform. Why would you want to do that? Well, if you have ADA, you might want to use some of their liquidity pools to earn some yield. There's a lot of things to worry about with this, including something called impermanent loss, which I can't go over in this video. I have a video of that in my crypto course, link in the description if you want to see that video and why it's important. But they have this really great feature called Zap In. So basically, if you have ADA, you can just zap and then put ADA in, and it will go through a couple of trades for you and essentially sell some ADA and buy one of the other tokens in the pool. And then you can start earning LP fees, which are liquidity provider fees, and also some extra yields as well from liquidity incentives. So I think this is a good design. It's a little bit more, pro rather than the kind of dessert theme stuff. But obviously these are important because they increase TVL, and obviously having a DEX is super important for real world use cases as more tokens come on and people have, things to do with them in the ecosystem. TVL is important, yes, but I think more important is looking at the real growth of Cardano over time, because that's really going to give us more of an insight. ADA wallets is something you always have to look out for. This is a free data studio for Cardano. I think it's Data Studio or Cardano Data Studio. You can look this up. You can see wallets are going up in the right direction. So, 3.1 or 3.2 million. I've seen some statistics say that it's actually closer to 5 million right now in terms of ADA wallets. This again is still really small compared to some other chains, but Cardano is kind of a different ecosystem here. So compared to some other chains, for example, like Luna, actually the amount of wallets is actually quite comparable. So obviously Ethereum and Ethereum-based chains have much more active wallets and wallets on their chains. But for different competitors like Luna and ADA, 3 million is very good. We can also see that the amount of native tokens is also very high right here. This is because of essentially ADA handle, which is where you can sign up for your own handle on the Cardano blockchain and leave that in your wallet as an NFT. You can see a bunch of native tokens registered here. So TVL, ADA wallets, native tokens, transactions, all going well for ADA, but really it's about the next level of growth. I think we've had this stage. Now we're looking towards the end of this year for the next stage. Part of moving to that next stage is getting tokens from Ethereum bridged over to Cardano. This is obviously going to be very important in terms of getting stable coins like USDC, USDT onto Cardano as well. There's no reason why, the Cardano ecosystem wouldn't want to use those. They're incredibly important assets, and it's definitely stable coins need to come onto Cardano to increase the use case for it. So good news in this respect is that Ajax and SingularityNet have basically come out with an update about this, and it's happening. So the ERC-20 converter, you can see it went from a test net towards the end of last year. They just updated a few days ago on this ERC-20 converter, and you can see the timeline now. So the rollout for this is Ajax ADA. This is one token pair that's basically being used as a test case, but in the future, this can be used for many other tokens. This is really important because maybe some people will want to bridge over some tokens and some liquidity onto Cardano for various reasons. Maybe there's a good incentive on one of the apps that will bring liquidity over. Maybe cheaper fees for some aspects and applications. So there's various reasons why that's positive for users, and obviously it's positive for Cardano to increase TVL. 25th of March, upgrade the converter bridge for Plutus, and then the 28th of March, verify the final converter bridge, and then 18th of April, rollout of the converter bridge on the mainnet. So that is really the timeline for getting some liquidity from Ethereum potentially, or at least some tokens that have a use case like USDC, USDT over, and potentially getting them into applications on Cardano as well. So now I want to highlight two real world use cases where Cardano is trying to bring in real users and then obviously build out applications for them on their blockchain to make their lives with tokens useful. So obviously there's a ton of speculation and kind of chatter right now about Terra Luna and what this ecosystem is with UST, which is a decentralized stablecoin doing incredibly well. Now Cardano also has their decentralized stablecoin that they're going to issue very soon called DJED. It works in pretty much the same way as UST and Luna, apart from Cardano itself is not the base currency. And so essentially what happens with Terra Luna is that for every dollar that someone uses to buy UST, which is a stablecoin, so 1 for 1, that dollar basically goes to buying $1 of Luna, which is then taken out of circulation. Hence, every dollar you put into UST is basically buying $1 of Luna and then increasing the price. Now, there's various different ways that Luna are trying to get away from the fact that Luna is the backing asset of Terra UST, including essentially just buying billions of dollars worth of Bitcoin. Now, this is in an attempt to, kind of allay any fears that if demand for UST falls, then there's going to be a run on the bank, basically, and Luna will go into a death spiral down. Now, there's a lot of speculation about this. I don't really want to get into that. But what's important to know is that as we move away from the speculation and, essentially all of these chains are up and running now in various different ways and they work in various different ways for various different product uses, right? So after Ethereum essentially becomes very, very low cost with what's going on with layer 2 and their upgrades, which is going to be happening this year, where do these other chains sit? Just saying that you're cheaper than Ethereum isn't going to cut it anymore. That's just not going to be any benefit for any other chain when Ethereum fees are 5 cents, right, on layer 2. So just saying you're cheaper than Ethereum, unfortunately, $0 are going towards that in terms of speculation when layer 2 comes online for Ethereum. So what is your use case? For Cardano, really their use case has always been trying to bring decentralized finance to the developing world. The ways they're going to do this is through DJED, having a decentralized stablecoin that they can potentially use in their ecosystem. But like I showed you with Singularity and Ajax, that bridge as well, I think, and Stellar Network are doing this as well. They're kind of a cross-chain bridge. Bringing those assets onto the chain is also really important. What I'm talking about really here, comparing it to Luna, is Luna has a very specific use case of UST demand. Stablecoins are becoming increasingly important, ever more so in the industry, for sure. So you're seeing USD coin move up, to now 50 billion market cap. So you have 50 billion of US dollars in circulation. We have regulation coming in the States, which is going to support stablecoins. But obviously decentralized stablecoins are different. Now for UST, the demand driver here is the fact that they give you 20% back in interest. It's a very clean product offering. Just put your savings in Anchor Protocol and get 20%. If DJED doesn't do a similar thing, then it's going to be difficult for it to be successful, right? This is just plain competition. Now, one of the things that Cardano is doing is trying to actually actively go into certain developing world areas and build communities. There is a project on Cardano called World Mobile Token, which is literally setting up access to the internet in developing areas in Africa, putting big balloons in the sky that beam down networks. And of course, the way that you pay for Wi-Fi and connection on that network is through World Mobile Token, which is on Cardano. So what I'm getting at here is that there has to be a real world use case and there has to be real world users. Technology is not worth anything if no one uses it. Now, a really big comparison here is Cardano going to be able to compete with something like UST with DJED by offering a high interest rate for Western savers? In my opinion, they could do, but obviously the jury's out. So obviously we're waiting for the second half of the year until lending protocols come on Cardano. They are restricted right now by the technology. They can't launch now, but they will do in the second half of the year. And Cardano wants to do the first lending of money to startups on the African continent in the second half of this year. What's important and kind of a comparison here is that the 20% yield that you get on UST right now is basically funded by a yield reserve, which is basically a loss leader, right? So they went and got $1 billion in funding from venture capital and said, we're going to spend 500 million of that on giving everyone a 20% interest rate, sucking in liquidity as a loss leader, as a marketing ploy to get people in. And then we will kind of ratchet down the yield reserve and ratchet down the percent that we pay back to savers over time once we've got enough liquidity in. That's very different to what Cardano are doing, which is trying to basically arbitrage the difference in borrowing rates between different parts of the world. So Cardano are going straight into developing world economies and obviously trying to get their borrowing rates actually lower whilst having high lending rates for Western money investing and wanting to get return on their savings. It's interesting, and there's a lot of unknowns right now how much this will be successful and what the interest that DJED can actually bring back on some of the lending protocols on Cardano. If you can lend your money out and let's say get 15%, something like that as a return on a stablecoin, I think that we would see a ton of money come into DJED and the lending protocols that are now being developed on Cardano. It has to be a competitive rate, but the difference is this may be more sustainable as a business strategy rather than what UST is doing, which is basically $1 billion from VC and let's try and get as much on there and the rate will start coming down after. So this is a big if, but that's just a comparison that I have right now. I'm not saying that one is bad or good or whatever, but it seems to me that Cardano, on paper at least, may have a more sustainable model for high rates for savers, and potentially that would be good for Cardano. Let me know what you think about that in the comments. It's definitely speculation right now. We don't know what the interest rate will be. We don't know if this is going to be a successful project in terms of lending, decentralized stablecoins to developing economies. We don't know what the rates are going to be long term as well. But it seems, it on paper is a seemingly good strategy, and we'll see how that works over time. If you want to talk more about that, actually, don't send a comment because it's just full of scammers on YouTube. Come to the private Discord groups. I'll leave that linked in the description and as a pinned comment as well. And if you want to see how I invest in all of these cryptocurrencies, I'll leave my crypto investor course in there. You can see my portfolio and my daily trade updates and everything like that as well. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.